Yo, what's up YouTube? Welcome back to Arc Capital Options Day Trading Mentorship Class 17. Today we're going to be going over trading psychology, the mental game, going over discipline, patience, and trusting the system. I was just talking to the students just a second ago. It's one thing is knowing the system, and the second thing is being able to execute it, and emotions are something that can hold you back from executing a system that you already know. It doesn't matter what trading system or strategy that you're trading, right? I like to think that there's a lot of strategies that work, but it really comes down to the person. Are you able to follow the rules of the strategy? Are you able to put your emotions to the side and follow what your rules say, right? So let's go forward here. So what you've learned, or what you'll learn, now you have the full ARC system. This class is the one thing that makes or breaks every trader. What happens between your ears? So number one, we'll be going over why psychology matters. Then we'll be going over the three biggest mistakes. We'll be going over FOMO, or chasing price. Then we'll be going over exiting early, not trusting the system, patience, waiting for the pullback, and building discipline, right? These are all core fundamental things to know, right? So if you understand, let's say, the biggest mistakes, you know what to stay away from, right? We're going to understand how FOMO works and how to avoid that. So let's go forward here. So why psychology is the missing piece. You can know the ARC system perfectly and still lose money. The system works, but only if you let it. What emotions make you do? Emotions make you enter before the candle closes because it looks like it is moving. All right, how many times has this happened to one of you guys where, let's say a stock, let's say Tesla is ripping in the morning and you think that it's not going to pull back. Your emotions is already telling you, oh, we're printing $20, $30 on the stock today. Let me get in right now before it leaves me, right? Before the candle closes. And let's say you get in the top of the candle and the candle closes and it's a huge rejection wick of the level that you were just breaking 2 minutes ago, right? That's letting your emotions control what's going on through your mindset with whether it's an entry or holding a trade, right? So what emotions make you do? Exit a winning trade early because you're scared it'll reverse, right? Let's say you swung a contract, let's say for example today, let's say you swung MU, or let's say you swung Tesla, and you got scared that it was going to reverse and it pulled back, and then it just ended up ripping 10-5 points in your face, right? This is all due to not wanting to give back profits, but in turn making it about the money. The more that you make trading about the money, the more you're going to be led by your emotions. This world, you've been taught that money is what moves the world, and it is, but a lot of people look at it like the goal. It's not supposed to be the goal, it's supposed to be the tool that gets you to your goals, right? So if you use money and look at it like a tool rather than what you need, you have a different emotional attachment to it. Does that make sense? So, emotions also make you sit out of valid setups because your last trade was a loss. I've seen this happen time and time again. Let's say a student takes a losing trade and they don't feel comfortable anymore, and an A plus setup comes around, and it's even happened to me. It's happened to every trader, right? Where the next setup comes around and it looks so good, but your emotions aren't there. You're scared to put up any risk just because of the result of your last trade. Guys, we've talked about this. With every system, you're not going to have an 100% win rate. So losses are part of the system. You can take a perfect cloud test, you can take a perfect pullback trade, right? And it can still not go your way. Whether it's a news candle that drops and changes the sentiment of the market, or whether it's just manipulation in the market, right? At the end of the day, if you're following a system and you're only taking trades when the system tells you to get in, yes, you will lose sometimes, but it will pay out more times than less. So if you, let's say, you have the same size on every single trade, you're expecting the same result, whether it's a loss or a win, you're going to be able to emotionally handle losses better, right? Because you already understand what a 30% loss feels like time and time again, right? If you're using the same exact size. So emotions also make you chase a move that already happened and buy the top, right? Sometimes you see a stock run 5-10% and it does it 2 days in a row, and you're sitting there, you didn't take any of it, and then on day three you're like, today is my day. but you don't decide that. Stock does, right? So you buy the top and it comes down and blah, right? That's all based off of emotions because you fear, or not fear that you missed out on the trade. You think that there's more trade or more room just because you didn't take it, right? So emotions also make you ignore the cloud signals and go with your gut, right? So what does discipline make you do? Discipline makes you wait for the full 10-minute candle closes before entering. If every student were to just wait for the 10-minute closes and only get in on 10-minute closes, there would be a lot less emotional trades, there would be a lot more better entries, and there would be a lot overall just more disciplined trading, less emotional, right? Because if you're getting the cloud test entry, that means you're getting the contract at a fair value, right? In comparison to the move that it's trying to make. So, discipline makes you hold the trade as long as the cloud says hold. We talked about this yesterday, guys. How do you hold your trades out longer? Maybe not getting out on a percentage based exit, but rather so getting out when the chart tells you to get out, right? Not because you're up 100%, not because, what is it called? Because the chart is moving slow, right? It's if you are playing calls and you are above the cloud and you're above the top VWAP and the price is still going in your direction, there's no need to sell, guys. There will always be retests, right? See if the retest is a fail. See if the retest is good. And if it is, stay in. If it fails, get out with your profits. If you've already juiced a lot of the trade out, you might see a contract go from 500 back down to 400, 300%, but you're still juicing the contract out more than if you were to sell all at 100%, right? Benji says, my problem is I don't trim. Well, we need to work on that, and you can't expect 1,000 for each trade, right? That's just not realistic. If you don't trim and you expect 1,000 each trade, simply you're just going to miss out on the profits that the chart is giving you, right? It sucks, it happens, but that's just because you have the same expectation every single time, and you want to make the most on each trade, all right? So, discipline makes you sit out when the conditions aren't right. No trade is a trade, right? No trade is a position, guys. Discipline lets the setup come to you instead of you chasing it. We've talked about this before, guys. An A plus setup should look kind of clear as day. It should look obvious. It should look textbook. That's what we like. That's one of the terms that we like to use. Textbook facts. So, discipline also makes you trust the system even when it feels uncomfortable, right? And we'll go more into mindset and how even if you feel uncomfortable, you probably should walk away, right? Clear mindset is very important when making financial decisions, guys. If you're playing up against institutions, Wall Street, banks, hedges, you really have to be sharp, right? So, going forward here, the 3 biggest mental mistakes we see. These 3 patterns show up in live sessions consistently. They don't come from not knowing the system, they come from emotions overriding the system. So, like we just mentioned, FOMO, guys, chasing price. What happens? The setup looked good, price started moving, you didn't have a position, so you jumped in anyway. How do you get burned? You're paying a higher premium cost, so you're paying a contract that is not at fair value, right? Because if the cloud test is making the contract value come back to reality, giving you an entry on it, risk to reward, if you're buying anywhere higher than that, you're already messing up your not only the amount of move that you can get out of it because you're not getting in at the test, but also just your overall risk to reward, guys, right? So you're paying a higher premium cost, smaller potential returns, and you need a wider stop, right? Let's say your stop is usually under the cloud, or let's say you play on that 30% stop loss. Well, if you wait for the cloud test, a 30% stop loss is under the cloud, right? But let's say you get in above the cloud after it's already left. Any cloud test, which you should expect, will get you out, right? Does that make sense, guys? Before I go on to exiting too early, does that make sense that, like, pullback on a bad entry, your 30% could be just a simple cloud test where you should have gotten in? Talk to me, guys. There's 15 of y'all in here. All right, bet. So, exiting too early, what happens? The trade is up 30%, you get nervous, ill reverse, and you exit. The cloud is still holding, and the trade goes and hits 100%. What's the cost of this? Leaving the majority of the move on the table and cutting winners short while full loses still happen, right? Sometimes fear will not only hold losers past your stop loss, but also cut your winners, guys. When you're cutting your winners, you're messing up your risk to reward, right? If you're risking 30% and you're only taking 30% off the table, you're playing a 1-to-1 ratio, right? That's not the best. We usually aim for at least a 1-to-2 ratio on moves that we're making here, right? So that's already going against the system. Three is no patience, forcing trades. What happens? Let's say the market is slow, there's no real setup forming. Let's say it's choppy, there's no expansion on the clouds, and you feel like you need to be in a trade, so you enter anyway. What is the cost? Unnecessary losses on low quality setups, burning your daily risk limit before the real setup arrives. Besides the daily risk limit, guys, besides the like 30, 40, 80, $200 you might lose on an unnecessary trade that was led from not having patience, you're also messing up your psychology at that point as well, right? Because then whatever trade that you are taking that is good, you're just paying for the loss you just took, right? You're not making money, you're just paying for what you just lost, which is a shitty feeling on a good trade. Going forward here, FOMO, like I was just mentioning, fear of missing out, stronger than your discipline, or FOMO is when the fear of missing out is stronger than your discipline to wait for the right entry. It is the most common mistake we see and the most expensive. What FOMO looks like I said, price starting to rip, you buy mid candle without waiting for the close. You missed the pullback, you entered higher up. It's going to keep going. This is something that we tell ourselves to convince yourself that your rules don't apply right now, right? You feel anxious watching the move without a position, right? If you're already feeling anxious that the move is going without you and that you need to get in that second, you need to snap back into reality and know that we get tests, right? So you enter on a 1 minute or 5 minute candle instead of waiting for that 10 minute close, right? So what is the discipline response? If you missed the entry, you missed it. Let it go. The next pullback will come, right? Doesn't mean you have to miss out on the move as a whole. You just get in on the next pullback, right? So, discipline also responds with a missed trade is not a loss. A bad entry is a loss, right? There are setups every single day. Missing one means nothing, right? There's trains every day at the station. Just wait for the next ride. Facts, and catch it. Watch the 10-minute cloud. If the candle hasn't closed, you wait. Ask yourself, is this an arc entry or am I chasing? Be honest with yourself, right? Exits here.
Yo,
What's up?
you know what that song is?
What song?
Waterfall.
Yeah.
That's how you gotta look at it, man.
Facts.
What's going on, bro? Sorry for being late for class, man.
What's up? I'm You want me to go through this one? I was gonna do this one really quick and let you do.
You got it. I'll pick
Alright,
up
bet.
after you. Let me know.
Bet. So, exits, guys. Let the chart decide, not your no, not your emotions. The real danger isn't using a percentage exit. It's letting the dollar amount on your screen cloud your judgment and let the trade turn into a decision about money rather than the move. Right, guys? Like I was talking about before, chart-led exits should be your default. Most of the time, the chart will tell you when to get out. Cloud flips on the 10-minute or price making its way back down to the middle VWAP. If those signals haven't fired yet, you stay in the trade and let the move develop. No signal, no exit. The chart is talking, listen to it, right? If you're going to be going off percentage-based exits, these are valid in specific situations. Let's say you're trading at all-time highs or in areas with no prior levels to play with. Let's say you're playing on a stock that's in a range and you're not at the top or the bottom of the range. You're trading in the middle, right? There's nothing to reference on the chart. In those cases, having a percentage pace target for your exit plan is smart. It's not emotional. But when it comes down to the moves where we know there's going to be a breakout or we feel or we're anticipating continuation, right? That's where the percentage based trims can work, right? But the full on exit should be chart led. Does that make sense, guys? So have a plan before you enter when and know when a percent exit makes sense versus when a chart level does, right? So what is the real problem? Money clouding judgment, seeing 50% and exiting because the numbers feel good when the cloud is holding. Um, An emotional decision. Equally, seeing minus 20% and holding past your stop is because don't want to take the loss is the same trap. Focus on the move, not the money. Your P&L is a result, not a signal. Right? So, you want to go over this, Rich?
So sorry, chat. Patience teaches you about patience right there, right? Patience, waiting for the pullback. Patience is not passive, it is an active, deliberate choice. Only act when the setup is there. The arc system that we use is built around waiting. If you skip the wait, you skip the edge. Now, what do we mean by this? If you, like Angel was saying, if you're just rushing into positions, trading off of like 1 minute or 2 minute time frame, and you rush an entry, and the play you get and ends up working against you, you didn't wait, you missed the real entry, and even if the trade starts to work and you end up going green, you know, from negative 20% to up 50%, you missed out on a better entry where you could potentially be up 70% if you just had that patience. Uh, why waiting is hard? Watching price move without you, it creates that anxiety, and the market feels like it's always doing something that, and you should be in it. This is my opinion. This is kind of like human nature. Boredom pushes you to take setups that aren't there yet, and after one winning trade, you want to stay hot and force the next trade. Now, this is something that everyone does. Every trader, no matter what level you're at, these are things that they face. And these are mental things that having the right system in place prevents. Why waiting is the edge. Cloud pullbacks give you a defined entry with a clear stop. You enter with the momentum already established, not guessing the direction beforehand. Better entries equals better risk to reward entry. Less you need to be right. You just need the patience because you already know it's trending and you're just buying a retest of the trend. Patience separates the arc traders from regular gamblers. Yourself these before every trade. Questions take 10 seconds. Answer them. Answering them honestly is the difference between a system trade or an emotional trade. Question one: am I entering because of an arc signal or because I'm afraid of missing the move? Uh, I wait for the 10-minute candle to fully close. Is there actually a pullback, or is price already extended and is in the middle of making the move? Holding because the cloud says to hold, or because I'm hoping? Now, this is very key. Is this a quality setup, or am I trading out of boredom? Guys, trading out of boredom can easily ruin a day, and you don't want to fall into that trap. All of these questions, guys, are what you should be asking yourself during a trade. And now, it's going to start to become second nature when you're looking for this, because every day you're going to come into the market and you're going to look for a trend. What's the trend? Okay, pullback. I just enter on the pullback. That's it. It sounds so simple because it is. It's just about being there, being able to watch all of these stocks and finding that momentum.
Want to do this one, or you want me to do it?
You got it.
All right, bet. So,
Because I need to do this more.
sitting out is a trade. Not every day is a trading day. Protecting your capital on bad days is just as important as making money on the good ones. No clear setup. The clouds are flat or choppy. There's no real pullbacks forming. The 10-minute is directionless, right? So, for example, guys, today morning we seen a lot of stocks that were trending upwards, and then we seen AMD, right? AMD looked like it was making a move back towards the upside, but there was no sort of expansion or clear move on the clouds, no clear setup, right? So anyone who ended up playing it just ended up getting chopped up, right? Until obviously the dump happened later day. So no story, no sentiment. If there's no clear reason for a name to move today, there's no catalyst, there's no sector move, there's no narrative to follow, right? You probably shouldn't be trading it. We trade names that have a reason to move. If there's no story, there's no trade, right? You can say that you can trade stocks that don't have a story if like they're hitting a psychological level or maybe breaking out on a higher time frame. But if there's no real story behind it, we're probably not looking at it or not giving it the attention story actually is, right? So, let's say you're not in the right headspace. You had two losses back to back and you feel or you're distracted and not fully focused. Your mental state affects your execution. A bad state of mind equals bad decisions. Close the platform and come back, right? Sometimes even going outside, guys, standing outside for 5, 10, 15, 30 minutes can really clear up your head coming back to the charts, right? A lot of people taking a loss enforce a rule, whether it's like, oh, I need to wait 15 minutes till I take my next trade because There will be times when you're not trading in the right headspace, and this is what we call going on tilt, where let's say you take a loss, and then as soon as you take a loss, you feel like you need to make it back that second, and you're looking at the chart, and it looks like the move is about to happen on maybe the same stock or another stock, and you get back in, and then you lose, and it's just a repeating cycle. This just all comes back to not being in the right state of mind, right? So it can happen with whether it's not waking up early or whether you're having problems with a friend or a significant other or family, or let's just say you're going through like just mental breakdown. Like literally, you should probably be staying away from the charts and coming back when you have a clear mind. Just like before, the setups are always going to be there, and a setup is going to be like an A plus setup should look textbook, right? It shouldn't give you any sort of fear. The fear comes from either the previous losses or just not having confidence in the system due to not having experience with it, right? Once you guys have, let's say, 5, 10, 15 months of experience on the clouds, you understand good cloud bounce looks like and what a bad one looks like, right? Let's say you see a cloud bounce and then you can't get above top VWAP and it starts getting wicky and you start to see volume fizzle out, you can identify that, hey, yes, we did get a cloud bounce, but there's no follow through. So I need to get out of this trade before it turns on me, right? Those are the type of things that you learn with experience. But yeah, move forward here before I continue to babble on. So I want to go over how to handle a loss.
All right. How to handle loss. My bad. Losses are part of trading. Even a perfect system trades lose sometimes. What separates good traders isn't avoiding losses, it's what they do immediately after. So the emotional response that have is to immediately jump into another trade to make back what we lost. To increase your size in the next trade to recover the loss faster. Or convince yourself your system failed and you start deviating from everything that you know and you learn, and yeah. You trade angry, tighter entries, bigger size, more risk, which ends up leading to bigger losses and you blowing up more money. Or you keep trading past your daily risk limit, chasing to break even. So the disciplined response is to step back, take a breath, don't rush back into the market. Review, was it a system trade or was it an emotional trade? If it was an emotional trade, write down why you felt the need to take it and keep that in front of you. Keep that note and why you felt the need to take it in front of you next day and going forward in that whole week. If it was a valid setup that lost, that's fine. Just move on and find the next trade. We're very good at finding these trades as a team. It was an emotional trade. Note it, write down, like I just said, and don't repeat it. For the next real arc setup, and don't manufacture. Don't trade something that's not there.
Yeah, you guys, when you're not in a clear mindset, some charts start to look really good that with a clear mind don't look good, right? And that's usually fueled after taking a loss or just wanting to make money back, right? Trying to force that trade. That's what we mean, right? So trust the system. It can't work if you don't. The ARC system has an edge, but the edge only works if you execute it consistently. Every time you override the system with emotion, you erase that edge. So process over outcome, guys. A trade can be executed perfectly and still lose. A trade can be executed terribly and still win. Judgment or judge yourself on the process you did on the process. Did you follow the system, not just the result, right? Sometimes you can have a really bad entry and still get a nice trade, and you're gonna sit there and be like executed terribly. I could have waited for the cloud test. I could have made this much more. You're gonna tell yourself everything that you could have done, right? So it's about focusing on the process, how it got you in that position rather than the one that you wanted to be in, not just the result of the trade. So one bad trade it doesn't define anything, guys. Zoom out. The system plays over hundreds of trades. One loss, even a painful one, means nothing about whether the system works. Stay consistent, guys, right? This is one of the hardest things to do. Simply just some like in a range bound market our system doesn't work the best, right? In a momentum based trendy market our system works the best. So sometimes being able to accept that setup or the system isn't going to have an 100% win rate is going to help you guys move forward from, let's say, one bad trade or a bad trading week, right? So your job is execution, not prediction. You're not trying to predict the future. You're executing a system that reacts to what price is doing. When you override it with that feeling, you're predicting. That is not the ARC approach. Build consistency builds confidence. Just like I was mentioning earlier, having that experience helps you build the confidence in buying these cloud tests. The more you execute the system cleanly, the more you'll trust it. Confidence comes with repetition, not from hopping each individual trade or not from hoping each individual trade works, right? Want to go over building discipline?
Yes, sir. All right, building discipline, practical habits. So discipline is a skill that you build, not a trait that you either have or don't. The habits that will make the biggest difference over time. And now this is, in my opinion, this is essentially why you joined here, because we have very good habits, very good discipline, and we try to trade like a team. We're gonna do better every day. We're trying to do better and really keep everyone on the same page on what we're watching. But I feel like in this run, we've done a very good job as a team. And now shout out to Achilles, shout out to shout out to Novolux, because we've all been talking about pretty much the same group of stocks for the last month, right? And everyone's pretty much been on point every day watching these same names. Discipline, very good approach, and yes, going on knowing your stop. 30% of your premium paid. Our standard stop is around 30% of what you paid for the option. If it hits that level or the cloud is flipping, you're out. Define this before you enter. Know where this is before you enter every trade. Watch the 10-minute time frame, not the candle formation, right? Watch the time frame. Let these candles play out. Sit there and be able to have patience in order to, I'm drawing a blank right now. Trying to do
To
two
be
things at
able
once.
to execute correctly.
Yeah, to be able to execute correctly and not based off motion. All right, number 3 is say the rule out loud before entering. 10-minute candle just closed at the cloud. SPY is bullish. I'm entering. Verbalizing it slows your brain down and forces the checklist, right? While you're saying it, you're thinking everything in your head. Okay, it's above the cloud. Okay, we're trending on these stocks, and we're getting a very nice pullback to the cloud here, testing the trend. This is a very nice entry for a long or for a short, whatever
R-
the case is.
Rich, but
Talk to me.
before you continue, I was going to say you can already see some of the students that are logged in and that do practice our system on a day-to-day basis. Text in the
Absolutely.
chat, they'll say, "Hey, Bob is coming to a cloud test," or "Is this a cloud test?" And whether they're sending a screenshot or telling us what stock to look at, verbalization or just even writing it down, exactly like you, Polo Loco, actually help you understand why you're taking the trade, right? It forces the checklist out of you checking the confluences that are lining up for you to take that trade, right? You can go forward now.
Well said, bro. And number 4 is to log every trade, system or emotional. After every each trade, write, was this a systematic trade or was this an emotional trade? Your patterns will emerge fast. On this in class 18, trade journaling. Now, I was pre-market. Identify your names and levels in the pre-market. You know already what you're watching, at what price you'd enter. The setup either comes to you or it doesn't. No guessing in real time.
So, sizing and risk mindset. Know your risk before you enter. Define your risk before entering every trade. Know exactly what you're willing to lose, removes emotion from the decision, and lets you execute the system cleanly. So, our standard approach here at our capital is around a 30% stop loss of the premium paid. Your option is down 30% and the chart is confirming you're out, right? We usually like to run a 5 to 10% risk on your account. Once it's gone, stop trading, no exceptions. We're usually taking 1 to 2 quality trades a day, quality over quantity, wait for the right setup. And for sizing, it's based off what a 30% stop loss would mean your account. Keep it within your 5 to 10% daily limit. Then you have your expect zero advanced style. This is not for beginners, right? Only once you fully know the system, once you fully understand the sentiment, once you understand the sectors, understand how earnings affect the market, right? How news market, not only knowing news, but being able to execute on it, right? So this is used for specific trades, typically when playing with profits from a prior winning run. This is not the standard approach, once again. You size smaller so you can take more shots. The winners that cover the losers. Usually, when you expect zero, you're throwing up less money on each trade, but this gives you the ability to take more shots on trades, whether it's in the same company, layering on different strikes, or whether you're taking a trade spread out within the sector, right? Let's say you're playing the memory sector. Let's say you're taking SNDK, MU, WDC, right? So, because you expect the premium to go to zero, you hold through the noise without panic or early exits, right? You're not going to be getting out at 30%, 50%, 80%. You already expect zero, right? That emotional, like staying in, or that emotional, like wanting to get out or anxiety of losing money is out the window, right? We literally seen it with this approach before. If it's usually the approach that you take when playing a lotto. You can go down 50%, then go up 800% in your face, right? So if you play with this approach, my bad, and let's say you're playing more plays across the board, usually the winners cover the losers, right? It comes down to your personal trading style. Uses this approach, right? Our ARC analyst. It works because there's zero emotion attached to the size, right? Want to go forward to don't take a trade if you don't understand.
Give me a sec. All right, so don't take a trade you don't understand. If you can't explain why you're in a trade, the setup, the story, or the cloud signal, then you have no business being in it. Copying a call without understanding it is not trading, it's gambling. Especially when you guys see us in a trade and you guys hear, what are we guys in? And we tell you, let's say, oh, we're in, for example. It doesn't mean just go to QCOM and just instantly go buy calls. No, you gotta look at the stock, and if you are looking for an entry, then you're looking for a retest, right? That is where you're looking for an entry. You're never buying into momentum already happening because it could work out, but it's not probable, right? And now our goal is probability. So now what understanding looks like is SPY is bullish on the 10-minute time frame and the daily cloud. MU is following, SNDK is following, WDC following. All the memory stocks are following in uptrend. The price pulled back to the 10-minute cloud, and the candle just closed, bouncing off of it. These are your entries, right? Semiconductor story this week driving you higher, like we've been talking about. My stop is under the cloud. If it flips, I'm out. I know what I'm looking for in this trade before I enter. You know everything about the trade that you're taking. You're not taking a trade. You're not figuring out the trade before you take it. Right. Now, when we're in a fast-paced market like this, it's crucial to have levels because the levels that you have on your chart are the levels that you can trade off of every day. You could always be prepared because you have these levels already. You obviously need to make plans and need to note all the levels and pre-market low, but the levels that you have set in the last few months or years of trading, these are key levels, right? You could follow them whenever the price is trading around it. What blind trading looks like is somebody in the Discord says to buy calls, so I did. It looked like it was moving, so I jumped in. Once, I don't really know why I entered. I just felt right. I don't know where my stop is or what would invalidate this, or I'll figure out the reason after. I just didn't want to miss it.
So, the system works as a whole. Every class in this curriculum is a piece of the same machine. Skip one piece and the whole thing produces inconsistent results. Education comes first always, guys, right? If you don't understand the system, we always say this, you shouldn't be trading it. If you don't understand the story, you shouldn't be trading it. It's better to educate yourself on the story or the trade for the next time we trade that stock. Because usually, if a stock is in a story, it's not just one move. We're taking it on a longer term execution, expiration, right? Catching the bigger move, or whether we're playing it on a week to week basis, right? You guys have been seeing that on the stories that we're chasing, we're getting in and out, we're staying in for a long time, we're having multiple layers to capitalize on the actual move, right? So, market direction from classes 1 through 5, knowing whether the market is bullish or bearish. Without this, you're guessing a direction, right? Then the arc clouds, classes 5 through 7. This is your entry zone and hold signal, the spine of your entire system. Class 6, VWAP bands, buyers versus seller control context. Helps you hold whether price is noisy. Entry criteria, class 16, candle closes confirmation, close confirmation, time frame alignment, pullback discipline. Wrong here equals breaks everything. 11 through 12, trade management, strike selection, sizing, exits. Even a great entry can lost with poor management, right? Management is so important after getting the entry, guys. The entry is kind of the first step, right? But being able to manage the trade is what's going to be able to help you guys juice out these moves, right? So, then class 17, psychology, executing everything above consistently under pressure in real time. This is the hardest part. If your results are inconsistent, ask yourself, which part of the system am I skipping or not fully understanding? Go back and learn that piece, right? Whether it's asking us during the live trading session, whether it's asking us right here, right now, guys, after we give you guys time to ask some questions. If you guys don't understand one of these pieces, either go back to the videos that we're watching or ask right now, right? We're done with these slides here. But Rich, if you want to go forward here to paper trade first.
Yes, sir. So, paper trade first, build the pattern, not the P&L. You need to understand what we're doing, guys. If you're just starting out, paper trade first, the goal isn't to make money right away. The goal is to build the pattern recognition and the system confidence before real money is involved. What paper trading builds is the pattern recognition. You start to see cloud pullbacks before they happen. You start to see that momentum dying, and you can kind of build those cloud pullbacks. Candle close discipline, waiting when the 10-minute closes becomes second nature. And overall system confidence. You see the setups play out, and you start trusting the signals. Guys, we don't trade like this for no reason. We thrive in trending markets. Emotional awareness. Even if you put paper, you'll feel FOMO. Notice it and learn how to control it. Entry and exit habits. The right process becomes automatic before real money is on the line. How to approach it? Treat every paper trade like real money. Same rules, same discipline, same position size. Use Webull paper trading. Same charts, same indicators, same arc setup. We have everything in the Discord. You guys see it. Follow the pre-entry checklist before on every single trade. When are you ready? If you can identify a valid arc entry without second guessing it, you hold condition and your exit before you enter. And you're executing the checklist consistently, not skipping steps. And you've seen the system work in paper and you trust it. You've taken multiple trades and you've seen how they played out in your favor and against you, and you know how to manage. This gets you this is like the reps. This is working out before it gets you there before the show. You know what I'm saying? This is the practice that you put
This is the pump set.
before
This is
the
the
Super
pump set.
Bowl. Yeah. This is the warm up before you're in the real game. And then you're in the real game. You gotta know how to play. You have to understand it. You have to control your trades and not let the trade market control it.
Facts. So, Class 17 takeaways. FOMO. A missed trade is not a loss. A bad entry is let the move go. Most exits are chart led. Cloud flip or VWAP at all time highs with no levels. A target or a percent based target is valid. Never let a dollar amount make the decision. Keep focus on the move, not the money. Have a plan before the trade. Entry, hold condition, and exit defined up front. Size with money, you're already okay with losing, whether it's a 30% stop loss baseline or you're playing with profits or expecting zero. Removes that emotional attachment. Patience, wait for the pullback. The edge is the entry. Don't skip it. Don't take a trade that you can't explain. Know the setup and the reason every time. The system works as a whole. Skipping any part leads to inconsistent results. And paper trade first. Building pattern recognition and confidence before using real money. Understanding the system before you invest any real to it, right? So in Class 18, we'll be going over trade journaling, tracking your trades, patterns, and growth. I'm going to be incorporating the app that I've been working on in the back for you guys with this class. Kind of guys an overview of how it works, how you can journal in it, and how you can practice the system that we teach in these classes all in one place. Facts. Um, yeah, pretty much it for today's class, guys. I hope everyone learned something new or just knows now what they need to work on. Maybe has identified something that's been holding them back from breaking through on the trading. Maybe you need to take a step back and go to paper trade. Maybe you thought that you could real money without knowing the system first, and you're getting some sort of block. So let us know, guys, if you guys have any questions, if you guys think that you guys are missing out on any part of the system that you need further explanation in. We can help you guys better these classes. The one thing with paper trading is the emotion isn't there. That's how it should be with the money. You know, be banging on paper trades though. Whatever trades you're taking paper trading, just use less size with real money, and then you'll stop being a little bit and hold your trades. No, I'm playing Danny. You guys deal with contract decay. I feel like my emotions come from my contracts getting fucked in value. Then later in the day, shit just rips. So it's like understanding that if the move that you're intending to happen, whether it's a push up above high day or you're targeting a level like on that, those contracts will come back to value. Um, also comes down to like understanding that you could have waited for it. It doesn't mean that you need to get out of the trade. Sometimes the premium decay is so people have a chance to get in for that same sort of fair value that you got in for. Does that make sense? Like when it slowly chops up or whatnot. Mostly just waiting, move happen and just giving people entries. What do you think, Rich? How do you deal with it? Because I it bother the shit out of me. I've kind of gotten used to it. Like I used to get mad when my contract would go down 5 minutes and then the next 5 minutes come right back up and not be at the same amount of profit. Like that shit used to get me so mad. I don't care anymore. I don't know. That's a lot.
Position size,
Yeah, it just doesn't.
position sizing, and you have to know like you're buying a weekly, like theta decay can come in very quickly into the end of the day. End of week weeklies are always risky. Like you have to play purely momentum, and if you are trading like Thursday, you want to be ideally buying next week contracts. And then just knowing position size. I really just feel like knowing the position size going into the weeklies is everything, you
I
know?
think also just focusing on like those cloud tests me out because usually they even for Tesla I think yesterday made the move. There was the 395s. And those contracts were at like before the move happened, and then it made a big pump and then consolidated for a little. Those contracts came right back down to 70, so or 70, 75. Just knowing that those cloud tests and that consolidation is gonna bring you back to that price. So getting in at the clouds basically, bro. And like we're having the right size, it's not gonna bother you. And if the move that you're anticipating happens, those contracts will come back to a greater value, especially if it does it with momentum.
Like you have to understand, bro. Like you have, and this is different. Like I'm gonna be honest, boys and girls, bro. When we're up, like I've had so many nights, like recently, today especially, like I let it go a little too far. But there's been so many days this week, like low key, I've been up, 6 bands. I don't say nothing. I get a little excited, of course, but I have open positions with 1,500, $2,000 of size on. And on those days where I was up, 6,500, my P&L realistically, when I would look at it, it started to mess with me because it was jumping from being up 6 grand on the day to being up 4 grand to being up 3 grand to being back up 5 grand, being back up six to being up four because I had so many different kind of positions on. So I had to lock in. I had to trim certain positions here and this. And it got to a point where okay, I would pick my spots where I would trim. Boom. And when I trim, I'm okay with like I say this. Okay with whatever else the risks that I keep on, the contracts that I keep on. If they're let's say I'm 150% on the contracts, I'm okay. Let's say I have five and I sell, I still have three and they're 150%. I'm okay if they go back to 50% and I have to sell them. That's my real, like, I'm okay with that. I don't care. And it sucks sometimes because this week it's happened many times where trade we were in went to back to 20% or even red, and it gets to a point where you just have to be number one okay with your risk, and then at the same time is when you're in a nice profit, understand that it doesn't matter. Like you have to detach about how much you're up on the day and just let the things let trade go, let the trade work, and let it play out in your favor, and don't get caught up in that money. And I got caught up in the money, and days like that, sold Tesla way too early, and I sold it for 200% or 150%, and it goes, Angel. A lot of you boys caught it, very nice, and I just had a lot of size on a lot of different positions. So it gets, I had to start trimming and everything that I'm. The point of what I'm trying to say is, when you're playing with profits, you have to be okay with $1,000 day to go back to a $500 gain day. You know what I mean? You can't be mad at that because those days where my P&L hit like 500, it ended up closing at the day maybe up 4,000, 3,500. And suck. I look back and I was like, damn. At one point I was up 6 bands today, but I closed up 3,000. And I'm thinking, great, God is good, but this is what I'm trading, right? You either take it all. If you're happy with the gains, you take everything off the table. Boom, you take it all off the table. You take your gains, happy. If you're okay with risk and you want more, and late in this market, I want more. I'm being risky in this market. And that is just what happens when you want more and you be risky. And you call it greed because it really is greed at the end of the day, but it is just being letting your trade work and not. It sounds crazy because obviously, like, it sounds crazy to say don't take 150% and then take it at 50% because you could have just taken it at 150%. But when it comes down to like let trade work, is unfortunately sometimes what happened is it ends up reversing on you, and you have to sell for a smaller gain than you were just at. You guys know what I mean? I'm babbling right now, but you guys know what I mean?
100%. Yo, I invited Paul and Bernie up in the stage because I seen that they were typing. I know Paul can attest for this a lot because he's recently been doing this live in front of you guys. So you guys have been seeing just the rollouts, being able to stay in the move after securing gains, having less money on the table, but still having chips basically to play with. You know?
Having a foot in the trade, but
Yeah,
taking a lot of risk off.
exactly. I don't know if you could talk or not. I know you. I think you said you were busy, but I don't know if you want to say anything to them. I know you hopped on stage. So.
I'm in the car. I'm just responding to people.
Got you.
Like the whole contract decay thing, it'll help you learn whether it's weekly, 0 day, whatever. It'll help you learn how far out the money like can go on certain stocks, and like starting to get extended. Maybe it is going to come cloud test. If you have five, sell four, let the one run all the way back to the cloud. And even if you're up 20, 30% still, you could just add right back in because say it goes from, say you get in at $1, sell them at $3, they come back to $1.30. You'd much rather have five at $1.30 than round trip it at just to go back up. You know what I'm saying? So you can always
Especially
trim and get back in, and it's not about your average, it's about how many you have. You'd much rather the higher average and five times as many contracts than the low average and the cool screenshot. You know what I'm saying?
100%. I mean, even when you're late, you're taking three off at $3. Like you get back in at $1.30, even though your average is higher, you have more. I guess you could say leverage to play with since you already took money or like already took
Off the
your
table.
risk plus
So then
more
going
off.
back in, you're not losing money. You're just giving back profit.
Yeah, so let's say it does come back down to $1 and you want to get out. Uh, Trade is losing, but you already took money off the table beforehand, so you're just basically giving back uh, what you
Yeah.
got previously. You know, just another way to manage risk, guys, instead of like the round
And to
tripping
stay calm,
with the
like
waves.
ample, which is why I said it in there with Benjamin. It's like we're in the money. So these $12 down days, like losing 1,200 on a contract. And it does it hurt? Yeah. Port that all the Marvels are in. I was down like on Marvel today or 6K on Marvel, but like I'm still up like eight or some more. You know, it's really just about staying calm, going with the flow. And as Bernie said, it's first day you're up 20%, then you're up 100%, then you're up 40%, then you're up 200%. And it's just like market and go up and down. And it's like, this is why, Benjamin, I've been buying short term Marvels. We get the push up, we hold, it pulls back. I get the short term, we get the push up, you sell the short term calls, and it just slowly keeps like those longer term ones. So yeah, they still go up and down, and the ebb and flow kind of hurts sometimes, but like in the end, like the long term thesis is the same. So it's like no reason to just get out because we're flagging and we have months left on the contracts. Because by the time it starts moving again, you're gonna miss it. You're gonna forget about it and move on. And it's just about going with the ebb and flow market. And
It sounds like you're cutting
it's
out
a
there.
preference thing now. That's a strategy thing.
Yo, if I
Yeah,
can, I want to
exactly.
say something. When you're looking at, big fan of swinging, and there's so many cons that I've caught that have been insane percentage. And one thing you want to do, bro, is never wake up at pre-market and look at the market right away. I'm kind of, it sounds kind of, but it's so true because the first 30 minutes of the market, everything is like down so quick. And there's been times where I sell everything too quick, and then 30 minutes later, like shit is ripping. So always just focus on the bigger time frames if you're a swinger and just stay on that. Don't go to the 5 minute, 15 minute, go to the 30, the hour, the 2 hour.
To make the decision on the play.
Yeah, the big percentages. I was waiting for Angel
Yeah.
earlier, and I wanted to show him. I think I took a screenshot, and oh yeah, here. So if you look at Zoom, Angel, on the Max Weekly, and then you look at YZ.
Let me pull it up
The
here.
reason why I took YZ, you would be able to tell because of Zoom. And if I'm expecting a move, bro, like soon, I'll get short term and I'll get long term and I'll cut the short term for the high percentage and I'll hold the ones with the longer dated because I'm really good at swinging. Like I have no attachment to the money.
Wait,
Yep.
which one?
Mark.
I'm an XYZ on the max weekly.
All right, I'll be back, boys. But I just want to mention those few things in chat. I'll talk to you either later tomorrow.
Sounds good, brother. I appreciate you hopping on here and sharing some words, brother.
You know what it is, bro, is that I look at every chart, all of them, and I always look at the bigger time. I was kind of over this with Angel. It's like your time frame paints the picture, and then you have to slowly break it down, right? And then if you look at the weekly, and then you see Zoom. Let me go to Zoom real quick.
Here,
Uh,
you see my screen?
okay. See if you. Let me look at it again. No, I don't see it no more. Oh,
Good or not?
hold on, because you use Trading View. So if I'm looking at Zoom, for example, right, and I'm on the max weekly, and I see that tight range with my MACD, main profit target would be 120, right? And if I'm looking, I'm gonna buy maybe June, July, and then if I'm expecting a move pretty soon, I'll buy next week's. And same thing that like the same way that Zoom looks on the Max Weekly. And those are the things that I look for. So it's not like I have a list, bro, of all these I just scan through everything and I compare.
Yeah, you were telling me before. It's really breaking it down time frame from time frame, whether you down from monthly, weekly, daily, 4 hour. Whatever way you want to do it, but just being able to see what each time frame is doing, I feel like helps a lot, right, Bernie?
Like, bro, if you zoom out on Zoom right there with your MACD, like zoom out on Zoom, right? Like you can see that range, bro. The MACD was just sitting nice, right? There was not much selling. And then you look at XP, I guarantee it's gonna do the same thing that Zoom did. Guarantee.
With this right here. So I was gonna ask you, when does the MACD really identify when it's gonna be like a bounce off of this line or a
Like for
clean
example,
bust
bro.
through?
Here, let me look. Dude, I was finding things to show you earlier, and hold on, let me look. I believe it's Spy. No, is it Spy? Yeah. So go to Spy, your 10-day, 30-minute, and I'll take a screenshot so I can share it with you. And let me see. Okay, your MACD right there. What date was that? That was right there where you're at. Go by where it says 06 and 13 on the time.
You said 0613.
At the very bottom, more to your right, more keep going right there. You passed it. That very high on the MACD. Left. No, go to your left. There. Yeah. So notice right there, bro, we crossed down, bro. And there's been a lot of selling pressure on that while we're still going up. That should tell you. And then, oh my goodness, if you look
So
at your
when the price
EMA, bro,
action is going down,
that
you can
goes
expect
down.
to cross.
You can expect exactly,
Okay.
exactly.
So when would you expect a bounce when the price is following with the MACD?
A bounce to the upside. So
Yeah, so like
those EMAs, bro.
let's say right here, like let's say price came downwards as well. Let's say it filled in this gap just for an example, and it came down with the MACD. Would that probability of this cross back up, uh, like
Yes,
being a
yeah,
bounce?
right. But then you would have to look at how the premium is moving. The premium is not going to move that good because you're not getting a strong push up,
So a
right?
slow
So then
grind
you
could,
know that
yeah,
exactly, exactly. Like you'd be like, oh, dude, I'm in these whatever strike calls, and you see the premium is hardly moving, right? Then you would think like, I noticed this might be, maybe it's not the right time to start going super long, but then it just played out perfectly.
yeah. What about this explosion right here when
So
this
then
crossed up? Was that because price gapped up? Because there's a slow grind afterwards, but the spike is huge on the MACD
all right, so then notice right there to your left how we were very far from the horizontal.
right here.
When you're that far away, bro, you're gonna expect the bounce 100%. And you can go back and look at different time frames, different tickers, and you're gonna see it. So then notice how we came up, rejected the horizontal while the EMAs are still on top, right? And then we finally broke over and then we held the EMAs and then we slowly started to come down and then we bounced right there. But see, right? But then if you go a little bit to your left on your chart, right, that area right there where you're at, notice how the candles, so you know we're down like the whole range to your left, right,
Yeah.
where the EMAs are kind of right, all that right there. You passed. Oh yeah, you're right. All that area right there.
Yeah.
Notice how your MACD was on the bottom, crossed up, while your EMAs are still squeezing. right? Then we finally broke over the horizontal, and your EMA started to algo. That same gap that you see on your EMAs, if you scroll all the way down to your right, where we're at now, scroll to your right, where we're at now. Notice that your EMAs are starting to spread out just the way they did to the upside. And
The
whenever you
MACD
see
is
it,
down here.
yeah, you might get a bounce, right? But then that's when your levels come in, and then you might reject.
Yeah.
SPY is kind of complicated because it's driven. But back to Zoom and XYZ, you're gonna see the exact same thing happen. You could pull up Bida and Boo and Baidu. You're gonna see the same thing, and it's always like next time frame, bro. I really don't like the daily,
So what about the
you
monthly?
know. So then, okay, pull up Roku and Twilio Max Weekly. That's a beautiful example of the things that I look for.
What's the ticker symbol for Tulio?
Low.
Okay, so we're
Do
getting
you
the
see what
cross
I'm
up
saying?
on the MACD.
If you notice the MACD on Roku, right, it crossed to the upside, right? You don't buy unless you're gonna buy shares, right? Look at that, same thing, bro, same thing, and they're both kind of.
I got
So
you.
those are the things. Those are the things that I look for, and then you would look at your main price target, right? And then okay, let's say Roku's at 100. I can't really see this far, but let's say Roku's at 100, and then you look at your levels on the weekly, and you be like, okay, I can see 130, right? Then you go buy some like months out 130s. And then when you start paying attention to the smaller time frames and you're like, oh shit, I think Twilio's or Roku's about to make the move, then you buy short term. You get that high percentage gains and you hold the longer expos.
So yeah, that's the Bernie approach.
Love it. I love that. I love it. I love it. I love it.
Damn, y'all got an extra class inside the class of the class. Hello.
So again, you have to always remember, bro, like different sectors, right? So then if you think about, like for me, bro, I want to short the shit out of Sandus and then you would look ahead and look at, is it Caterpillar was one. And then you go ahead and you look at EE, right? So then you look at Pfizer, Moderna, Johnson and Johnson, right? You look at MO, which is like a tobacco company, and you have to even if Angel and J Rich they're not talking about these tickers, and you
Cut out there, brother. What'd you say? Did I cut out? Can you guys hear me?
No, I hear you.
Bernie, you there? Damn. Did we lose him? Oh, he's spawning back in. Hello? Yeah, Bernie.
yeah, I don't know what happened. That
Oh,
should
there
just
you go.
kick. Yeah.
We couldn't hear you.
Yeah. So I trade. I'm a swing trader. I like term, not super long term, but I
You
love
like
them.
catching the bigger move and taking advantage when there's momentum, when you think that the move's gonna happen on a more intraday scale. This is what I got out of it. You know,
Stream, bro, it's just kicking me out.
it's kicking you out.
Yeah. Shit freezes. Yeah. So weird.
That's weird.
But yeah. Yeah, bro. Lagging indicator. Huge fan. It works. It call it a pre.
What is happening? It says he's on the stage.
But
Yeah, students are saying they can't hear.
yeah. Yeah, bro.
Nah, I appreciate you hopping on here, bro. All this isn't sauce was too good.
Yeah, you might want to end your stream, bro. I think that's what's fucking everything up.
Let me see. All right, boom. Is that better?
It did it again.
Oh my gosh. Yo, Rich, are you lagging out?
I'm big chilling, man.
All right then.
But yeah, pretty much it, bro.
I appreciate you hopping on here, bro. That was an unexpected little class in a class.
Yo, really, bro. Thank you, bro. That was awesome. I learned something from you.
Lagging.
Indicator, baby.
All right, bet. If there's no more questions, guys, I guess I'll just send it off with a little prayer and we'll get out of here so you guys can.
Yo, we start. I will say I'll think about adding some swings into an alert chat. You know,
Appreciate that, Bernie. Hello.
My fucking guy.
just I need 5% of the profit. Great class. I appreciate it. Thanks for letting me speak, guys.
Of course, man.
Anytime, Bernie. Much love, brother. Thank you for the sauce.
God bless you, bro.
For the sauce. Everybody else, man, have a great one.
Thanks. Let me get right into this
See you guys.
prayer.
Yeah.
Dear Heavenly Father, I'd just like to thank you so much, Lord, for having such a dedicated team that shows up day in and day out, Lord. I just appreciate you for being the same way, Lord, always just working for us, even in our sleep. You're always working towards what you have for us, Lord. And I just appreciate you for being so consistent and patient with us. I ask you to guide us and give us the same patience, discipline, and confidence, opportunities that you present to us on a daily basis, Lord. Just ask you to give our students and ourselves the discipline to be able to follow this system and follow these rules to create some sort of longevity out of investing and trading and all of this, Lord. And I just ask it to be all in your name, all in your will. Just also would like to pray for everyone's rest, and if anyone's going through anything, whether it's mentally, whether it's emotionally, physically, spiritually, I just ask you heal them, Lord, and to just show them that you're there for them and that you could be that fulfillment that they feel like they're missing. In Jesus' name I pray. Amen. Let's get it, guys. Let's have an amazing day tomorrow. And, yeah. Get it, guys. I'm going to end the recording right here.